Planning can be complex and time-consuming, so Reach Reporting decided to create a tool that allows you to do more with less effort. Our three-way planning tool uses a familiar spreadsheet environment to provide a complete projected business picture by seamlessly integrating P&L, balance sheet, and cash flow statement. Income and expenses budgeted on P&L automatically flow through to balance sheet as earnings. Invoices and bills resulting from those transactions also impact balance sheet accounts receivable and accounts payable positions. Furthermore, they show as either cash in or cash out on your cash flow statement. The time when cash inflow or outflow is recorded on the cash flow statement will depend on the terms you set for your payments. And all this is happening automatically, without the need for complicated formulas on your end. In short, everything you decide to tweak, be it your business's success, by influencing income or expense, or a purchase of a new asset, or a new bank loan, or a new employee hire that will increase payroll costs. All those changes will flow automatically to your net cash flow and show you the projected cash balance at any point in time. So you can plan not only around your business performance, but also around liquidity and solvency. Let's say you plan to repay your short-term business loan by $25,000 each month in the following year. Repayments recorded as a decrease in loan on the balance sheet. Will automatically show in your net cash flow as cash outflow of $25,000. So let's create your first three-way budget and forecast in Reach. Reach Reporting integrates P&L, balance sheet, and cash flow statement, but you can still decide to only budget for your P&L. The bank account you choose will be the balancing account for all planned business transactions on the P&L and balance sheet. It will record money in and out resulting from all budget assumptions made. All automated calculations, including the selected cash account, are locked for editing and marked with the lock icon. You can pre-fill data or start from scratch. If you choose to pre-fill data, you can apply a growth rate to the entire P&L at the very start. Also, if you wish, you can exclude deleted accounts used in past bookings. Every time you open the budget, Reach Reporting will check for any missing or deleted accounts to ensure that your balance sheet remains in balance. The first time it will show a settings pop-out that can later on be found by clicking on the gear icon at the top left. Start with budgeting your P&L, drastically cut planning time with automated calculations, and use the intuitive driver-based row settings to plan your income and expenses. The best part of your new budgeting experience is that you can visualize your projections every step of the way and easily strategize around future trends, not just the existing ones. Use drivers such as previous period values and apply growth rates, or use a trailing average to make your projections. Adjust target values to your preference. If you have a spending cap for specific expenses or a target for specific sales, you can opt for the bucket budget. For each driver, you can choose to either apply seasonality or allocate the amounts equally through months. Also, you can allocate custom amounts or percent increase or decrease across all months at once. You can multi-select rows to apply the same driver rule to several accounts. You can also use our forecasting algorithms and make projections based on past year's trends. Linear forecast is the line of best fit between 2 years of historical data referenced. Period-over-period growth rate takes monthly seasonality into account and applies a year-over-year growth rate from historical data forward to your projected monthly values. The best part is that automation is not the end. There is a lot of room for customization, same as in our reporting tool. You can simply override a cell with manual input or with a formula that references other cells, just like you are used to doing in a spreadsheet. You can drag or right-click and copy values across. The customized cells will turn yellow. Track all changes made by checking the visual icons next to the row settings gear icon. Also, at any point during your budgeting process, you can take a look at the actual pre-filled data, as well as at the variance from the budget values you created. Next, budget your accounts receivables, accounts payables, inventory, loans, capital expenditure, and other balance sheet positions. The balance sheet pre-fills data with the final month actuals without applying the growth rate chosen when you first build a budget. Similar to your P&L, you can also use driver-based row settings for automation, or customize cell and datasheet inputs, just like in a spreadsheet. But the balance sheet has an added level of automation for AR, AP, and inventory calculation. You can configure those by clicking on the gear icon at the top left. AR, AP, and inventory automated calculations are the link between projected values on the P&L and the balance sheet, based on the timing of your payments and collections. They allow you to forecast your balance sheet position without relying on complicated formulas. Calculations are based on payment days and income and expense accounts mapped. There is also an option to have some percent of invoices and bills settled in cash. For example, if you usually have a 60 days payment terms for bills and 50% of cash payments, then half of the monthly expenses mapped from the P&L will be shown as cash out immediately, and the other half will remain in accounts payable balance for 2 months. Finally, automate your cash projections. Your ending cash balance will be calculated automatically from changes made on the P&L and balance sheet. So if you plan on getting a new loan, a transaction recorded under liabilities on the balance sheet, that projection will automatically show as an increase in cash under financing activities of the cash flow statement, and also as an increase in the ending balance cash. As you tweak drivers on your P&L, you will automatically see how it reflects on your monthly cash flow and cash balance projection. Since the cash flow statement is fully automated, it is also logged. For an even more customized approach or scenario building, use a datasheet and create your own calculations there. For example, you can choose to copy and paste total sales and expenses from the P&L, already adjusted with growth rates and other rules applied, and then create scenarios. You can create worst and best case scenario based on inflation expectations, your customer churn rate and gross margin, for example. You can also leave comments to track your planning logic and decisions, and help others working on the budget understand the reasoning behind assumptions made. When you finish modeling different scenarios, show only rows that you will want to link back to the P&L and balance sheet, using the eye icon. You can also save different scenario budgets, and use them in dashboards and reports for budget proposal presentations. Easily strategize and decide which budget option would best fit your business circumstances and planned growth. Once you have your final budget approved, make it a default in your company settings, so it can be pulled into template reports and dashboards automatically. This video briefly covers what is possible with Reach's new budgeting tool, so if you have any questions about budgeting, make sure to set up a demo or send us a chat.